All right, today we're diving into a real head-scratcher from the stock market. We've got a company stock that is just absolutely soaring, posting these massive gains. But, and this is the weird part, at the exact same time, a key technical analysis is flashing a sell signal. How on earth does that happen? Let's unpack this thing.
And this is the big question, right? You see a stock up nearly 300%, you think it's a rocket ship to the moon. So why are some analysts pumping the brakes? These two things just don't seem to add up, and our goal today is to figure out why.
So the company at the heart of all this is NBIS Group, ticker symbol NBIS, and it is the perfect case study for how the market can send you these completely conflicting signals. Our job is to decode what's really going on here. Okay, so here's the puzzle in black and white. The stock's sitting pretty at almost $128, but the analysis says sell signal. And this warning is coming right in the middle of what the source calls a powerful, accelerating uptrend. You can see how this would confuse anybody, even seasoned pros.
To really get to the bottom of this, let's start by looking at the good news. We're going to build the case for the bulls here. Let's look at all the data that says this stock is an absolute freight train and why everyone's so excited.
So just look at this journey. Only 3 months ago, NBIS was trading down around $35. Then, in early September, it's like a switch flipped. It took off, doubling from about $65 to a high of almost $133. This isn't just a slow and steady climb. This is what you call a parabolic move. It's just whoosh!
And if you're thinking, wow, that looks like a straight line up, well, this number right here is the statistical proof. It's called an R-squared value. You don't need to be a math whiz, just know this. The closer that number is to 1, the more perfect and reliable the trend is. A number this high is basically telling us that the stock's upward charge has been incredibly consistent, not just a bunch of random lucky days.
And wow, check this out. This chart just screams momentum. The current price of nearly $128 is just floating way, way above all of its key simple moving averages. I mean, it's not just a little bit above, it's almost triple the long-term 200-day average. That is a textbook definition of a ridiculously strong uptrend.
So, if we stopped right here and only looked at this trend data, the decision would be a no-brainer. The momentum is insane. Buyers are in complete control. Case closed, right? Well, not so fast, because that's only half the story.
Right, so that's the bull case. It's strong. But now we have to flip the coin and look at the other side of the argument, the case for being cautious. Let's dig into the evidence that suggests this high-performance engine might be starting to run way too hot.
And really, this is the question that unlocks that whole sell signal mystery. When a stock moves up this far, this fast, you have to start asking, is it possible to have too much of a good thing? Has it gotten ahead of itself and is maybe due for a little break?
And that brings us to this key concept, overbought. Now, the best way to think about this is like an engine that's been redlining for a while. Yeah, it's putting out incredible power, but it just can't stay there forever without overheating and needing to cool down. An overbought stock is exactly like that. It's performed so well, so quickly, that it's probably going to need to take a breather or pull back before it can even think about going higher.
And it's not just a gut feeling. The data is flashing red. We're looking at 3 different tools here that measure momentum: RSI, CCI, and stochastics. They all calculate things a little differently, but you know what? Right now, they're all shouting the exact same message. This stock is deep in overbought territory.
So here it is, the whole puzzle on one slide. On the left, you have Team Bull. Trend indicators are giving a big thumbs up, saying the trend is super powerful. But on the right, you have Team Bear. The momentum indicators are waving these big yellow flags, warning that the stock has gone too far, too fast. Both are totally valid ways to look at a stock, and right now, they're pointing in completely opposite directions.
So what do you do when the data disagrees with itself? How do we solve this? Well, we have to zoom in. We've got to get granular and find the exact price levels where this fight between the bulls and the bears is actually going to happen. We're talking about key levels of support and resistance. And listen, these are not just some random numbers on a screen. You should really think of them as battle lines drawn in the sand. The bullish trend is going to clash with those overbought warnings right here, and the stock's next big move is likely going to be decided by which one of these levels breaks first. Okay, let's break down this battlefield. Up top, we have resistance. That's the ceiling, right around that recent high of $133. If buyers can smash through that level, that's a huge victory for the bulls. But if the price starts to fall, the first line of defense, the support floor, is around $120. If that floor breaks, it's a sign that the bears are taking over, and those overbought warnings were spot on. All right, so now that we've seen the bull case, the bear case, and we've marked our battleground on the map, we can finally put all the pieces together and talk about what could happen next according to the source analysis.
And really, it all comes down to those price levels we just talked about. If the stock breaks above that $133 resistance, it's a signal that the bulls are still running the show and they've shrugged off those warnings. But if the stock breaks below that $120 support level, that's the confirmation that the pullback is here and those warnings were right.
And this quote from the original analysis just hits the nail on the head. Listen to the language here. Medium confidence. Caution is warranted. And my favorite part, a mild pullback would be healthy. See? This isn't a 5-alarm fire. It's not a panic signal. It's a suggestion that this amazing run just needs a little breather.
And that, right there, is the solution to our puzzle. The sell signal wasn't saying the strong trend was fake. It was commenting on the trend. It's not predicting a collapse. It's just suggesting that a little pause, a period of rest, or even a small dip would actually be a good thing for the stock in the long run. It lets the engine cool down before it tries to fire up and continue its climb.
So this whole thing brings us to the most important question for any trader or investor. With this stock, NBIS, the answer is all about watching those key support levels we identified. But stepping back, for any stock you're watching, learning how to tell the difference between a healthy, normal pause and the scary beginning of a real reversal, that's one of the most valuable skills you can ever develop.